Let's talk about this turn of events in Ghana, where it's very different for how it panned out compared to, say, Nigeria. What do you make of the reversal in policy and what's behind it?
Yes, well, it would appear as though political imperatives, the pressure from the trade unions in particular, were responsible for forcing the authorities in Ghana to back down with their plans for a fuel price adjustment that would have led to an increase. What we were actually surprised by was that December 28th announcement that fuel prices were to be raised in Ghana. There had broadly been an expectation that some sort of adjustment was overdue, but little expectation that this would happen ahead of Ghanaian elections that are due later this year. Now, of course, the reasons behind the policy reversal will not be widely known everywhere, but to investors, this will look very much as though the considerations, the political pressure that was brought to bear on the government was responsible for that policy reversal.
So how sustainable is this, given the issues we know behind the reason to, first of all, look at the subsidies?
Well, Ghana generally is in a much better place than it used to be a few years ago. If we think back to the last time the country faced the pressures of elevated oil prices, back then Ghana imported all of the oil that it needed, and of course it wasn't an oil producer. Now there is some sort of a mitigant in place, and of course Ghana has also become a lot more active in terms of hedging the price risks that it faces. So we wouldn't expect anything like the scale of the balance of payments crisis that we saw in Ghana a few years ago. In terms of fiscal policy, also, the outlook is much improved. We've moved away from those deficits in double digits as a percentage of GDP, and we're looking at a much more manageable level of around 4.8% of GDP overall for this year. Now, of course, that does provide some leeway for the authorities to perhaps accommodate some of the spending pressures that they will see, and inevitably the fuel price increase is one of those, without necessarily changing the fiscal outlook very much.
So what you are suggesting is that we are unlikely to see any worsening of government books here as a result of the reversal of this policy, and also on international markets in terms of the pricing of Ghanaian bonds. We are unlikely to see any impact in terms of pricing given these recent developments.
I wouldn't put it as strongly as no fiscal deterioration on the back of this move.
Right.
We ourselves have long advocated, for example, that the system that would probably suit Ghana better would be to see more flexibility in domestic fuel prices, precisely so that they do become less politicized and you don't see this accumulation, the potential for a bigger shock in the future when Ghana faces an inevitable fuel price adjustment. Now, having said that, we don't think necessarily that this climb down on the policy is going to be enough to be a game changer for the entire fiscal outlook. Mm-hmm. But what will leave investors perhaps a little less comfortable is the fact that Ghana's political cycle now does seem to be that much more of an influence on economic policy. Right. And that will inevitably lead to them being more cautious about what else might change, where else we might see some deterioration in the fiscal outlook.
Right. Now, what lessons can Nigeria draw out of the Ghanaian situation? I mean, we have a very different situation in Nigeria that obtained after the government tried to scrap subsidies there.
We're really not comparing like with like at all, because in the context of Nigeria, we speak of a subsidy where there used to be a cap in the fuel price domestically at 65 naira a litre. And of course, we've seen that adjustment to between 97, perhaps slightly higher. Now, the makeup of the subsidy is, of course, entirely different in both countries. Ghana has had a managed fuel price regime, but of course it's seen much more frequent adjustments to those domestic fuel prices. Ultimately, if African countries are looking for a model, something that's likely to be sustainable in the future, the South African model, where there are adjustments on a monthly basis, depending on the extent of over-recovery or under-recovery. And this, of course, will depend on the exchange rate, the currency, as well as international oil prices. That creates a much more sustainable basis for the management of fuel prices longer term.